Hey, how's it going? Welcome back to my channel. And today we are taking a look at the Fib retracement. So, the Fibonacci retracement is a technical indicator that allows you to spot resistance and support zones based on a mathematical formula created by Leonardo Fibonacci. And it was created something like 300 years ago. Or it really doesn't matter how long ago it was created, but it was a long time ago and it is still being used by traders worldwide. And it is a very good tool. So to access it, you need to go to Binance or whatever exchange you're using or TradingView, whatever it is. The third column, or I guess on other exchanges it could be a different column, but here on Binance it's the third column. And you come back down here to Fib retracement and you can mark it as your favorite. So it can pop up in this toolbar. So once you have selected it, now you need to draw it out. You need to map it out on the chart. So the way you map it out is from a swing low to swing high, or from a swing high to swing low. Now, what is a swing low? Swing low is a corrective wave, basically a move to the downside, and a swing high is an impulsive wave, which means the price is surging up. So for example, this is an impulsive wave, this is a swing high, and this is the top of the swing high, and this is a swing low. So you'll get what I'm saying just in a second. Now this, let's say this is the swing low right now, this is a good bottom. You press on that, and as you can see, you have this little chart popping up, and you want to place it exactly on the top of this swing high. As you can see, there we go. So, and you do have all these Fibonacci levels. So once you have your fib up, you're going to have another bar over here, and you want to click this cog, the settings for the fib retracement, and this are the settings that you want to set up. Now you can skip this 1.414 level. You don't want that just yet, because if you're just starting to use, or you're new to crypto, you're just starting charting, then you don't really need to overcomplicate things. So have these basic levels. You can stop the video and get those settings on your chart for the fib. Now we have this swing low to swing high, and we can see that we have six different or seven different fib levels. We have the 1 level, the 0.786, the 0.618, the 0.5, the 0.382, the 0.236, and the 0 level. So how this works basically is this shows you where the price can get rejected and where the price is more likely to use it as support. So what happens is you come up through this first fib level and you hit your head a bit on it. The next candle, by the way, this is the daily chart. The next candle you have, and you're testing this level, the 0.786 level, as support. So you flipped it to support. As you can see, there was a wick up here through this Fibonacci extension level, and I'm sorry, Fibonacci retracement level. You wicked through it, and then you got rejected back down, and you start climbing through it. You made higher highs, and then you can actually ignore this trend line as well. So then you had this huge impulsive wave. You just blasted through the 0.618, which is the golden ratio. This is the golden pocket where the price usually has some resistance, and on the way down and on the way up. You'll see what I mean later on. And then we started hitting our head on the 0.382 level over here, and then the price tested the 0.5 as support, because the 0.5 is usually when most of the resistance and support are. So basically this is where the bulls and the bears are fighting. Then you started climbing through the levels, and this is February, this is mid-February, and you're climbing through this level, testing its support. Then you wicked up a bit, and you see these two lines over here, support and resistance. and they don't really matter right now. I guess I can remove them just so it doesn't they don't confuse you. So then you reach to this peak over here, which was $58,597. And then you started climbing down. You started making lower lows and lower highs. And now you're starting to test these previous fib levels as support. And this is when the initial crash happened in February, where it wasn't really a crash, it's just a healthy correction, basically, is what it is. But people like to sell at a loss when the market's down, when you really should be buying or just holding if you have coins at that time. So not all the people understand this, and you need to understand when the market is going down, you either buy or you just hold. The only thing that you should be selling is USDT or cryptos. That's the only thing you should be selling at a dip, because if you sell at a loss, then why bother coming into the market at all if you're not going to make profit, but instead make losses? So you don't want that. And that's a bit of market psychology for you there. But as you can see, once you started coming down, you started wicking off and testing the 0.5 level as support, which, like I said, it has a lot of support and resistance, just like the 0.618. So keep that in mind. Keep these two levels in mind always when using the fib. The 0.5 and the 0.618 are very important levels. Then, as you can see, we started climbing back up. So what you do now is, so now that you've deleted the fib and you want to map it out once again. So from this swing high to the swing low. So basically, when you've bottomed out and you want to throw the fib up, you want to do it from the top to the bottom. As you can see, the fib levels have now reversed. So previously, the 0 level was at the top. Now it's at the bottom. And the 0.618 and the 0.5 flipped. So just because we flipped the swing low for swing high. So I hope you understand that. I hope it's not too confusing. So now you start coming down and you start wicking off these fib levels and you start testing them as support. So the 0.382 level is a very sometimes difficult level to get through. Not always, but a lot of the times you're going to find yourself struggling through this 0.382 level, especially when you're going through it after a dip. And then you start climbing up back up, and as you can see, you didn't really have a lot of resistance at the 0.5 or the 0.618 levels. So we just made those higher highs pretty easily, and then we wicked back up and we started climbing up. And this is when we delete our fib retracement, just like that. And you want to start a new fib. So starting from this swing low to the swing high, there we go. So now, as you can see, once again, testing the 0.5 and you are testing the 0.786 as support, and you're just in between these two levels, as you can see here. So what this is this is a good way to swing trade. So basically, you buy here and you sell here. That is how it works, and that is how you make money. But if you're a hodler, then the charts don't really matter. You don't want to learn the technicals and all the ins and outs, because you just stake your crypto and that's it, and you and you sell it in a 10 years time, and you buy yourself a Lambo and you live your life to the fullest. Now, if you want to swing trade and if you're starting crypto and you want to learn the charts, then the fib is a very good tool for that. So if you knew how to swing trade, if you knew how to use the fib before this video and you knew how to use the fib at this time, then you would have known that the 0.618 level is usually a very strong resistance, and you could have sold here and bought back in at this previous 0.786 fib level. So that is how you do it, guys. That is how you use the fib level. So also, if you want to buy in, for example, let's say you want to buy into Bitcoin. And you can do this for any crypto. I'm just choosing Bitcoin as an example right now. So also, how can you use the fib in a different way? So let's say you want to buy in and you're waiting for that retracement. You can use the candles to determine where the price can go. Now, it's not going to be 100% all the time, but it is a good strategy. So as you can see, after these swing highs, the price usually comes back down on its previous swing high. So this is the previous swing high. And as you can see, the price pretty much went exactly back down on this previous high. And the same thing happened here. So we had this impulsive wave over here. As you can see, this is an impulsive wave. And then we had the corrective wave down. And then we started coming back up. And as you can see, once we fell down over here, this was the previous swing high, as you can see. So you could have targeted that, for example, and you had that support level and you're somewhere around here. And you're going like, well, I wanna buy Bitcoin, but I don't want to buy in now because it is at a peak price and I want to get in at a good price, at a lower price. So what you do from swing high to swing low, you draw out the fib to this resistance and support level. Well, now it's support if you're somewhere in here. And keep in mind, all these candles on the right aren't there yet because we haven't gotten them. We're just up here and we're kind of predicting the price based on the previous swing high. And as you can see, that is the bottom. And you could have bought in, you could have set yourself a buy limit over here at $53,000 because that is the 0.236 level and that would have been a good buy-in. Or you could have had another buy-in here at the 0.382 level, which was at 55,454. So that's one way to do it, guys. That is how you can do it as well. So as you can see, we did fall back on this previous swing high. Right now we're falling on it and we're testing it and we're making this double bottom over here. I'm not going to jump into the TA right now, but we're forming this W bottom. And as you can see, we are testing this strong support level here. So that's one way to use it. For example, now if we want to map out the fib, as you can see, back to the bottom, swing high to swing low, what we are seeing right now is we are still below the 0.236. And once we are going to start coming back up, because I think Google and Visa announced that you can now pay with crypto on using their services. I'm not sure. Don't quote me on that, but I think they've released those news just a couple of hours ago. So what you're going to find yourself doing is once you start coming back up on the fib, because hopefully we don't break down to 45,000, but that could be another possibility because as you can see, we have another swing high here, just around here. As you can see, that is a previous swing high, and that is where the price can go. So what you do is you drag out the fib lower, and you see that you have this 0.236 level. So perhaps we are coming back down to this level. So this was a good buying opportunity here at 50,000. And if Bitcoin crashes, you can buy in more, but if you don't want to buy in here and you're looking for the absolute bottom, which you're never going to get, you're never going to catch the peak price or the bottom price. You're never going to do that. But if you are looking for that, then you can target this $46,000 Bitcoin based off of the impulsive move that we had here on not March, I do apologize. This was February 8th. Yep. So that's how you can use your fib. Also, let's say you can use it the same way for price predictions. Let's say I want to see Bitcoin at $72,000. Let's say, all right, here we go. So there you go. That's 72. Let's say using our technical analysis, we got that price prediction over there. And you want to see how are you going to get there using the fib retracement. So what you do, swing low from the bottom to this swing high. Okay, And now you're going to see where you're going to have most of the resistance. So you can just drag it out just like this. There we go. So now you do see that you're knocking your head on the 0.5 level here. See? You see that? You see how the fib works? I don't know how it does that, but thank you, Leonardo. Thank you for creating this retracement. Look at it. It works beautifully. Look at this. Bounced off the 0.5, went back down, tested the 0.786, went back down to the previous level, went back up to the 0.618, couldn't break through it, went back down, tested the 0.786 as support, and started coming back up and got rejected from the 0.382 level. So as you can see, we're just getting rejected off of these fib retracement levels. And once you come back down like this, the next move is probably going to be a lot more stronger, and you are more likely to break through the levels, because usually what happens is when you break through the 0.5 level, that's how you that's basically golden and means you're coming back up. But as you can see, we got rejected here. And so, this is how you use the fib retracements, guys. There's a bunch of ways to use it, and it's a very useful tool. Do your own research on it, guys, because I'm not going to do it justice by just talking about it in this video and showing all the ways that you can use it. Do your own research. I'm going to link some websites in the description where you can check it out and learn for yourselves. And draw this out on the charts as well, guys. Do draw this out. So you can use it for price predictions, for future price predictions. You can use it for possible support zones where you want to buy in and you want to see the strong support zones, because it does work, guys, and it's very, very useful. So yeah, this was it for the fib retracements. I use it on all of my videos and all of my updates that I do on this channel, and it's very useful and it's helped me a lot. So yes, like I said, do your own research into this. It's a great indicator, and I recommend that you study it because I do use it a lot on my channel, and it is very useful. And a lot of you don't know how to use it, and I've noticed that from the Telegram chat. And I asked you in there if you would like to see a video on this topic, and you said yes, guys. So that's why I'm doing this, just for you. And I know that this isn't going to be a very popular video, but that doesn't really matter to me because I'm here to help out the guys that watch me, the guys and the girls. So thank you for watching. Thank you for all the support, all the comments. I really do appreciate it. And I will catch you in the next video. Goodbye and good night.